Thanks, thanks, Shankar, for that very nice introduction. Uh, I mean, we have looked up to CAMS, and I've been trading the markets from the late '90s, so I've always looked up to CAMS and you. So it's nice to be getting interviewed by you for this, and I think you kind of summarize the whole thing really, really well. One of the best summaries I think we've had introducing Zerodha to an audience. So you're absolutely right. As in, uh, we do broking, but we are not really a broking firm. I mean, that's how we think about the business as well. Now, I'd be lying if I said all of this was planned from day one. It wasn't. Things evolved, we adapted, and I think one of the things that we've done well as a business is we've adapted quite fast. As in when we grew, we learned where the opportunities are. We were quick to adapt, and I think one of the reasons for us to be able to quickly adapt was also the organizational structure. Right, we are still a bootstrap business, so we don't have any professional investors. So which meant that all the decisions that we could take in the last 10, 11 years, uh, there weren't, we did what was right for the customer, right, and at every point of time, and of course what's right for the business as well, but then we did it, keeping the customer in mind. So to, so 2010, when we started with Zerodha, I think no, I used to trade the markets very actively. My younger brother had joined me in 2006. So he was a better trader than I was. So we decided that he continues trading and I give a shot at broking business. And this was in 2009, 2010. The reason for that idea to come about was because the National Stock Exchange had launched a free trading platform for brokers. So it was called NSE now. So if you're a broker, you got a free trading platform, and that's when the idea came that if a trading platform is coming for free, can you go disrupt on pricing, right? So in India, brokers were still charging a percentage brokerage fees, and it didn't make any sense for in an online world to be charging a percentage commission, right? So we said we will charge a flat fees per trade, uh, and the ambitions when we started in 2010 was just to cater to very active traders. We used to be very active FNO traders. I used to be very active in a lot of online forums, talking and sharing about markets. So we were trying to just build a very broking platform for very active traders, and on back of a vendor platform. So there was, I mean, I get sometimes called a technologist. I really am not. I'm more a business guy. All the technology is thanks to Kailash, who heads our tech. But 2010 we started the business. Around 2013 is when, I think 2012 is when I kind of realized that this business has a potential to grow big, right? If you were to ask me, when we started the business, if we had gotten to 1 lakh customers, I would have been like, dude, we are set for lifetimes. So there wasn't very large ambitions, and maybe one of the reasons why we were not able to go and get VC money in the start, right? Because the ambitions weren't there, and maybe it was also the wrong time to be doing broking business. 2010 was probably the worst year for brokerage as an industry historically. So around 2013 is 2012 13 is when it kind of realized that what, we can go and build a large business, and not just for active traders, active FNO traders or intraday traders, but also for investors and all of that. And we knew that that can't be done on the back of vendor platforms. You can't go to a third party platform, white label it. There is no moat to be able to do it. So the first 3 years, it was completely white label platform. And uh, the other thing that we did very differently was, which we don't get credit for, was as much credit for, is that actually we brought in a lot of transparency to the industry, right? In broking, or actually in any banking or broking, the deals offered to you is based on the net worth, right? I mean, you walk into a bank, based on your net worth, your bank manager offers you deals, right? So we said, as Zerodha, we said, we will not change our offering for any customer, irrespective of how much revenue he generates or how rich he is, right? We said we will treat everyone alike. Now, in the bargain, the leverage we got by doing that was that we could now be transparent. So for the first time, we started blogging. I put my head on the table in all the online forums possible, as as a CEO of a business and of a broking business, and completely answering transparently. And Indian broking industry, I don't think until then had ever seen something like that. right? Because everything was very opaque in the way the business operated. So I think what we disrupted really when we started was more transparency and not really pricing, because there were already brokers who were charging whatever we were charging. So we were not really the lowest costing broker on day one as well, right? So around 2013, we is when Kailash joined us. And around him is our tech journey started, right? So, which is we kind of, Kailash is a proper monster. I mean, I think he's the best technologist I've seen in my life. Is and the way I met him also was very serendipity kind of thing. So there was this company called Sensible where he was a co-founder. I was bankrolling that startup and it didn't fly, and me and him hit off, and then I convinced him saying, what, there is a mother of all bull markets waiting to happen in India. Why don't you come join? Let's build this together. We need help in terms of technology. And our ideas matched quite a bit, right? So he joined in 2013, and around him we started building our products. So 2015 is when we launched our first in-house trading app called Kite, which is our web and mobile platform. I think one of the best things we did with the launch of the platform was that we actually launched the API ecosystem, which powers the trading platform before the trading platform itself. Right? So we launched this thing called as Kite Connect APIs. So Kite, the web and mobile app, are two apps on top of this API ecosystem, right? And so what
So
it
your app uses your APIs. That's
yeah,
brilliant.
so that's how it's built, right? So and actually not just Kite, web, mobile, even Coin, all are internal apps, right? They're all almost like apps on top of this underlying
That's
API ecosystem. And so we call that those that ecosystem as Kite Connect. Anyways, in 2015 we launched Kite. I think the big challenge for us with Kite was you had to keep it simple, minimalistic, good looking, but you also had to give all the bells and whistles your active traders required, right? Because active traders, require all charts and open interest analysis and all of that. So that was a complex piece of the building the Kite web and mobile app. But we launched this in 2015. 2015 December, we also went zero brokerage for equity investing. What was happening for us as a business was we were getting white label. I mean, we were getting whitewashed as one of those you use Zerodha only for active trading. If you want to invest, use ICICI, HDFC. Right? We wanted to change the image of that for the business. So we thought, why not let go of completely brokerage charges for equity investing? Because anyways, we were not making too much money from equity investing trades. So that worked really well for us. The virality hit for the first time. And people came in, they liked the new user experience. They started inviting people. Then Aadhaar happened. Aadhaar and this demonetization and online onboarding, because the biggest roadblock for us in this whole journey was onboarding a customer. And once it became online, so 2016 when we went live with Aadhaar, we were at 100,000 customer. We are at 5.5 million almost today, right? So it's actually grown 55 folds in the last 4 or 5 years as compared to the first 5 or 6 years. So that happened. The other thing that suddenly opened up was we realized that this API ecosystem that we built is very valuable for other startups to come build on top of us, right? So by then we had also realized that India doesn't require another buy sell trading platform. We had already attempted to solve for the education piece using Varsity, which is our education initiative. Probably the second or third largest in the world on capital markets today. So we were trying to solve for education. We were trying to solve for a trading platform, but we realized that what probably stockbroking requires, or growing the capital market ecosystem in India requires a niche user experience and not another trading platform. So we opened up this API ecosystem and we invited startups. Now for the startups, firstly, they didn't have to do the dirty job of building all these plumbing lines between exchanges and all of that, right? Second, they didn't have to worry about regulations, compliance, and all of that. Third, very quick go-to-market types, so you didn't have to wait for the infra to be ready and etc. But fourth, the most important part was that we said, if you build a good product, we will showcase it to our customers, right? Because in the business of money, validating the product is really, really tough, right? So the first startup we met was this company called Smallcase, who's done really well now. And so when we met them, we also realized maybe there's an investing opportunity. So we started this thing called Rain Matter, which is It's like a fintech fund incubator, and we started investing between $250,000 to $500,000 because by then we're profitable as a business into these companies. So Rainmatter happened in 2017. Direct mutual funds on exchange platforms got introduced. We never, while we could have sold mutual funds for the first 7 years of our business, we didn't because the regular mutual funds didn't fit in well with the theme of the business, right? This is not going well with this whole transparency and all of that, right? Because you made money from the manufacturer. So 2017 we launched Coin, which is today probably the largest direct mutual fund platform in the country by AUM. And then the products kept getting better. We've always constantly, like Kite is actually the third version of the Kite platform today. When I say third version, it's completely built grounds up 3 times over. And then 2020 happened, COVID happened. I mean, weirdly, the business suddenly grew like we were at 2 million customers and it's now at 5.5 million customers. So it's just it's kind of blown out of proportion over the last 1 year or so. And so that's generally been the journey, and
that's a fascinating journey. But lest we give the impression to non-entrepreneurs that it's all a bed of roses everywhere. Surely here and there must have been some hairy situations.
Well, I mean, there have been many such situations. There have been. I don't think there's anything rosy on this planet, right? At least in the business of entrepreneurship. I think for us, I think for me, the toughest pieces of my journey was actually pre-Zerodha than post-Zerodha. As in, I used to be a trader. I've blown up a couple of times. I worked in a call center for 3-4 years. So I've done all of that. Before Zerodha, so post Zerodha actually seems like a rosy drive because, the worst.
Yeah, it's all falling into place.
Yeah,
beautifully.
And
So, see, in one of your blogs, I was looking at your outlook on third-party investors, on funding.
Right.
And perhaps amongst large organizations, yours and Sridhar Vembu's are the only two that I can think of who remain bootstrapped at scale.
Right.
And you have made very cogent and strong remarks, strong reasons for being what you are now. And I totally empathize with them. But if for a moment you look at the other end, the valuation end of it, at one stage in life, if you decide to list or something, do you think that migrating from a hope and glory sort of valuation to a proper, fundamental based valuation based on revenues, profits, etc., it always seems to me like it's a step down for some strange reason. Right. So you would probably be valued lesser than a company who's losing 1,000 crores a year today. Right. Does that faze you at all?
No, I mean, the thing is, like, money has really never been the focus right from the start of this business, right? As in, if it was, we would have raised money long time back. I mean, it's kind of ridiculous the kind of valuations that we've been offered over the last 1 year. Right. Yeah. And like, if you can ask the biggest, they are like the biggest VCs and PEs in the world. Yeah. And they're all like, dude, I don't think there's another guy on this planet who would say no to this kind of money, is what they're doing. Right. So, no, I don't think for us, it ever was about money. Now, the thing is, if we were to list for some reason, right, I think the market forces will automatically move our valuations to wherever, one of these newer internet-based valuations. I mean, like, so I know we could list it, say 15 times earnings, right? But then, because there are competitors who are getting, like, for example, Robinhood is just done a large US broker, right? As in, it was very similar to us in terms of our product and etc. Is valued at $60 billion, right? So someone's gonna get up and say, what, if Robinhood was valued at this, maybe Zerodha should be valued at this, and then the prices will adjust automatically, right? So. And as long, I think the valuations has kind of moved away from, the way people value businesses has moved away from this price to earnings to, I think today's VCs, PEs that I know, they just care about growth and nothing else, right? As in no profit, that doesn't matter. It's about, growth and just being being in the top 1 or 2 of the particular vertical, right?
Yeah.
And as long
as that thought, I'm going to come back to that later in the discussion because that's very interesting. I felt that too. I want to spend a minute on your technology strengths, right? You're right. Kailash has got his head on his shoulders, very straight. And for infra at scale, he's doing a fantastic job. And if you say that a running application has been rebuilt 3 times ground up, hats off to that. I think I know how difficult it is to transit from one to another running application. And you are big votaries of FOS, of free and open source software, right? One, do you ever have any form of pushback from the regulatory environment of the sort of software that you're using on the fact that you're not using branded software, so to speak, right, on the governance surrounding systems and so on, that it should follow a certain methodology and not necessarily what you think is best for it? Do you ever have any pushback?
No, not really. I mean, so we've had, we sit on a bunch of committees with the regulator and exchanges and etc. So we've actually said, why FOSS is actually better, right? As in, a black box where you don't know where, what can go wrong versus something that is being, used by so many people and issues getting reported is a lot better than using a black box, So, we've spoken to exchanges, regulators many times, and there's never been a pushback. We have actually almost nudging them to start thinking about FOSS there as well. So.
That will be a change. What I find impressive is that the ownership of technology is strategic for you. It is not, some CTO over there doing something, comes up and says, okay, I need a budget for so many crores, you sanction it, and then he does something. It's not that at all. It is a totally strategic ownership. The people who look at technology, who make decisions about technology are right at the top, starting from ownership level. And I think that comes through in the products that you. What is your system for taking user inputs and incorporating them into your products? How do you do that?
Yeah. So the thing is, we don't really have all of these product managers and all of that. So so I work closely with a team. We call it a Z team within the office. There are like 15 young boys and girls who understand markets well, and who are constantly getting feedback from all different places. And they kind of put up these bunch of suggestions saying these are the directions, etc. So we sit and debate for a while. And post that, I usually end up taking it to Kailash and the tech team. And then we sit and talk about it, saying, is it worth doing or not doing? Or where in our roadmap should this be? And that's it. I mean, that's how simple it is, So there isn't, just to give you an example, Coin, which is probably the largest direct mutual fund platform in this country, was built by 2 people on the tech team and is being run by a 4-member team. Right? It manages a 15,000 crore AUM today, So
I'm sure Star MF and others would be interested to know these numbers.
Yeah. No, I mean, in the sense, so we've always, I think the first few years of a business, we understood the importance of not having technical debt, right? And all these, dependencies on vendor platforms. So today, almost every single thing in our business is owned by us, right? And like even our internal communication also, we have a really popular, internally we discuss like a Slack types, right? We have a discourse instance that completely FOSS again. Right? We have invested in a company called ERP Next from Rainmatter, and ERP Next is FOSS, and it runs all our back office platforms, right? As in our email, for example, Kailash has actually open sourced this utility. It's called ListMonk. Essentially like MailChimp types, right? So we send between, I think, for 10 to 20 million emails a month, and we spend something like $20 to do it, right? So, like if you were to go use MailChimp, you'll probably spend like, like ₹1 crore a year just to be sending your emails, right? So it's, and it's a 30-member tech team, a 34-member tech team today. So, I mean, and not a single person on the tech team has quit us till date.
Amazing.
Right.
Amazing. So tell me, Rainmatter is looking more and more interesting. Do you take outside LPs into Rainmatters? A lot of people on this call would be interested.
No, we don't, because the way, like if you were to ask any of the Rainmatter startups, our investments are done for impact and not really for, any ROI in terms of, so all our investments are like, dude, what's the impact you can create? And, today we have actually extended that to Rainmatter Climate, through which we are investing into climate change startups. And again, we're like, we don't care anything about the returns in investment. Anyways, this money is being done out of, like there is no objective, because as soon as you start taking outside money, then you have to worry about return of capital and all of that.
This is like CSR part 2 for you. Almost.
Essentially,
Yeah.
yeah.
Tell me about it is always perceived that broking is a risky business, right? Every now and then you hear about somebody going belly up, not able to manage a settlement, and some client did something, etc. Is there risk in the business, and how do you manage it?
Yeah. No, I mean, see, the thing is, the risk in the broking business is based on how much you give leverage, right? The more leverage you give to your customer, the higher the risk you're taking as a broking firm. So right from day one of the business, actually one of the other reasons for Zerodha to start was SEBI in 2009, after this whole financial crisis, introduced this short margin penalties, right? So they said every broker has to collect this much margin from the customer. If he's not collecting this much margin for the trade, there will be a penalty applicable for tomorrow, right? So that's when it kind of hit on me that, it's a level playing field, right? A broker can't compete with you based on leverage, right? Because if he could compete with you in terms of leverage, Zerodha would not have made any sense to do it, right? Because, active traders would have just gone to the person who gives more leverage.
Correct.
Right?
Correct.
So for us, the big trigger to start the business was that, it's almost like, how in last business in NBFC, your 50% haircut is mandatory for everyone, like that, right? So that no one can actually leverage more than 2 times on last anymore, right? So
what about risk with the platform and the infra and so on? Because once in a while you hear about even NSE has broken down a couple of times. HDFC Bank has broken down.
Correct, yeah. No, I mean, it is. And at our scale, it's just, I mean, the bad mouth, it's like ask me, right, what is not the thorny parts of my journey has been times when there has been issues with the platform. And no tech platform can be up all the time, right? Yeah. And for us, because most of our audience are the 20 to 35-year-old who are very active on social media. Even if something were to, even if you're down for 1 minute, we are trending on Twitter and it's quite chaotic. So the risk in terms of technology, see, thankfully that risk, is, as a broker, you're ring fenced from that risk, because a client, when he's onboarding, he signs a document with saying that he understands that a tech as a platform can have it. Because otherwise no broking business in the world can take a tech risk. So but there is another issue, right, which is the futures and options business. And the futures and options business in India is like, if you look at exchange turnover today, 95 to 97% of the turnover is from futures and options, right? And in futures and options, people inherently are leveraged, right? If you're buying Nifty futures, you're paying 1.5 lakh rupees to buy 7 lakh rupees worth of Nifty futures, or buy a short or whatever, right? So tomorrow morning, assuming North Korea decided to fire a nuclear weapon, brokers can have an issue, right? So right from day one of the business, we've been earmarking, we've been taking out funds from our profits, saying, what, this is for that black swan day.
Right.
And we need to take this out and keep it aside.
Right.
Because, a broker, every, like how in 2008, there were 2 days when markets fell 20% each on 2 days, and a lot of brokers were out of money, right? We know that somewhere
one day it'll happen.
It'll happen. But thanks to SEBI has just been extremely proactive over the last 4 or 5 years, right? I mean, the kind of regulations they've brought in is just phenomenal, right? And they've reduced the risks in the industry to significant margin. But that said, tomorrow morning could be that day where market falls 30%, 40%. And if it were to fall 30, 40%, every broker is going to be out of money, right? As in, from his pocket. Thankfully, we've built a decent amount of corpus today. So, to be able to take, those hits, right? But I keep telling this to our team, saying that, what, we should just keep 10% of all our profits. Think of it as an insurance policy, because one day it's going to come back. I don't know when, it could be 2020, it could be 2025, right? But one day it's going to come back. We just have to be prepared for it,
Absolutely. I want to talk about, you're a market participant also. I want to talk about some things, some trends in the markets of late. And the first of them, I want to talk about crypto. Right. Rather, I want to talk about blockchain and 2 applications sitting on it. Crypto, which is a very hot topic in India now. Somehow governments have taken radically opposing views on crypto for some strange reason. And I want your view on what is good for India, one. And I also want to talk about non-fungible tokens, which is another application sitting on top of Ethereum. And is that ending up creating a new investment asset class, or is it a fad that will go away over time, whatever? Just your views on these 2.
Got it. Yeah. No, I mean, see, the thing is, I, for a while, almost every event I used to get asked, do you use blockchain, AI, etc. At Zerodha, we use none, right? As in, we haven't found a use case for blockchain or AI or whatever, right? So the only place where we use a little bit of AI is during our IPV process, right, for image recognition. So we have not built it ourselves. Amazon has this thing called as recognition, which is a AI piece. So if you want to match your photo on your PAN card, so Aadhaar copy to your photo on this thing, you can do it very well. So about crypto as a use case, I've never really understood why the world needs what crypto is, and I've known some of the biggest investors in crypto businesses, right from 2014 15. I've missed out on maybe like a phenomenal return that I could have made by investing in some of these exchanges and even the crypto assets. But the thing is, I could never really understand crypto as an asset class personally, right? As an I'm still don't know what is it.
True, I accept, and for the same reason, I'm not an investor in art, for example, or antique cars or whatever, because I don't understand those asset classes. Right. I can't for the hell of me understand what people see in one piece of art as opposed to another piece of art, and so on. But does that make the asset class bad in itself? Right. If there's a bunch of guys who want to invest in it and who see value in it, what's wrong in that?
No, absolutely. There's nothing. No. So if SEBI allowed Zerodha to SEBI RBI had allowed Zerodha to offer crypto to our customers, we would have done it.
You would have.
Right. I mean, there is, if the people want to do it.
You have a position on the ongoing debate about whether crypto should be allowed in India or not at a legislative level.
Correct. No, I think it should be allowed, but I think there has to be some checks and balance. It can't be allowed the way it is right now. It's just, I mean, I think there are a few coins which are proper Ponzi schemes, they're proper pump and dump schemes, and
that's true,
right? So there has to be some checks and balances, but the problem is who puts checks and balances and how do you regulate this? It's almost impossible to regulate. I mean, crypto, right? As in, you can of course regulate money going from your bank to a crypto exchange, but once it goes there, how do you? Right? It can go from one wallet to another wallet to another wallet to somewhere else. So it's so I don't know. I mean, I think every regulator around the world is probably thinking about it now, as in how do they regulate it, right? Because once they But I think once it's regulated, if crypto as an asset class is becoming bigger by the day, I think Indians should have access to it, because not giving access to something which is growing year on year, and Indians missing out, I don't think is also right. So it's a very tricky kind of a place to be.
And what about non-fungible tokens? A piece of art that is represented by
I think this is heights of like maybe I don't get maybe I'm old school, right? As in, because
you are old school. What about us?
I don't know. I mean, I still can't make sense of it. So I think it is. I think what's happening right now is, especially in the last 1 year, with all the money that the US government has given to folks in the US, they're just
putting it somewhere.
They're just finding newer and different kind of ways for the money to go out to. So no, I can't make any sense of it at all.
So the point that you made about all the money that is being printed brings me to another point, which is that market listed stock valuations. Listed stock valuations, I really can't understand. I mean, there was a time when you could apply some rationality to it and say, if the company is like this, then this is the expected valuation, therefore it's overvalued, and at some point it will correct, etc., etc. But all that has gone out of the window. It looks like almost like listed company valuations are mirroring private equity valuations. In the sense that there's money, there is stock, and I'll just buy it regardless of the price. It's almost that now. What is your view?
No, my personal view is I don't think we should be looking at stock markets going up. I think we should be looking at more as the value of money going down.
You're right, you are.
So I don't think markets are really going up. It's just all the money, extra money in the ecosystem is really, the value of money is depreciating really, really fast, and which is artificially making everything else seem like it's going up. Like everything. I was just reading about palm oil. I mean, all edible oils are up 100% in the last 1 year, right? And especially at a time when the economic activity is
so subdued.
So it is. Crypto, the way crypto assets are going up. I mean, real estate in US, Florida is at all-time highs. New York's at some areas in New York. So all of this essentially, I don't think is the actually asset prices going up. It's really the value of money, because otherwise you can't really, you can't really justify why else at the current economic situation, stock market should be wherever it is.
Absolutely. I think that's a very nice way of looking at it, which I had not. I'm sure a lot of people here are looking at it with new eyes now. Tell me a little bit about Zerodha going forward. I know that you are slowly entering into manufacturing, creeping into it, so to speak. I think Smallcase is a sort of proxy entry into manufacturing. I think that you're planning to launch an AMC as well. Maybe it's already underway. So clearly, you are moving into manufacturing from purely being an intermediary of sorts. Is there anything beyond that as well? Are you planning a fund-based activity? Are you planning an entry to the payment space and so on?
Not really. I mean, I think we have found our hole, which is capital markets. So we intend to go as deep as possible, you know, and because like personally, one of the things I've always believed is that the odds of succeeding is higher around your core competencies.
Yeah.
And you know, just you can't just go pick up random businesses and build just because you feel like building it. And for us, a natural extension would have been lending, but personally, I don't enjoy lending, you know, because I'm very anti-capitalistic in that way that, you know, I feel that people shouldn't borrow for things that they don't want. So, you know, so yeah, so it is, I mean, they don't need, sorry, you know, and so yeah, so, but while, you know,
I think this is the benefit of not having an investor.
absolutely.
I think that you're your own sovereign and you can, you know, make all these decisions for yourself.
Yeah. So yeah, during the course of Zerodha, right? So when we started the business, like I said earlier, right, it was about building something for very active traders. Then it became education with Varsity, which is kind of, you know, teach people about markets. Then it became all these niche user experiences to grow the capital market ecosystem. But the thing is, I think one thing one thing that keeps bugging me is that we aren't really, you know, in all of this, we aren't really helping a person do better with his money, right? Of course, we help him save costs, we give great user experience, but is he really doing better with his money just because he's getting, you know, a better platform or a lower cost? Not really, you know, and that's something that we've always constantly been thinking about over the last 2-3 years, especially after us doing quite well as a business, right? As in, and we've been trying to think of what possibly could be the answer for this. And so we've thought about this platform called Nudge, right? Which is like a user experience layer on top of Kite, the web and mobile app. And so the thing is, I think to invest and trade better, right, you have to more than really picking up the right stock. I think it's about following like these 5-6 very basic risk management rules well, right? Which is, you know, don't go against the trend, don't put all your eggs in one basket. If you're going against the trend, maybe bet size, you know, do it small and stuff like that. Right? If you follow these 5-6 things right, I think your odds of winning goes up exponentially, right? And
but then again, not just targeting active traders or active investors, if you want to use that term. Because
even the passive guys, you know, I mean, anyone who invests, like just to give an example, you know, when this whole Yes Bank debacle was happening, right? The most held stock at Zerodha was Yes Bank, and all by passive guys.
Wow.
Right? You know, so it wasn't active, you know, intraday traders buying Yes Bank. It was actually people who very passive, right? As in coming and buying it and then averaging it down and then averaging it down, then getting influenced by this whole disposition bias, selling their profitable holdings, buying more of Yes Bank, right? So, so the thing is, the way we are thinking of it is, for example, we're about to, you know, last year we launched this thing called Penny Stock Nudge, you know, which scares, you know, like if you want to buy penny stock, we scare you away from buying penny stocks. But the next few things that we are doing is actually quite cool, right? So one is around portfolio concentration, etc. So if you're buying too much of a certain stock or sector,
does that drill into mutual funds also? Does it integrate coin? And it does.
It does. So and the thing is, what we realize is the only place to capture the attention of the customer is in the order path, right? From the time he decides to buy a stock to the time he places a buy button, you really have only that much time where you can actually teach him something, right? Post-trade, pre-trade, you can do whatever, it doesn't matter, right? People don't have attention spans to actually read anything, right? But this few seconds that you get, right, you can actually teach a lot of stuff to the customer, right? And like penny stock trading volumes as percentage of our equity trading volumes is down by 70-75% after that nudge, right? So
Oh, wow.
Now, can you kind of nudge these people to do the right things? So yeah, that's really our next big thing. Right now we are working on this thing called tags. So while buying the order, we are trying to ask him, dude, why are you buying the order? Like, why are you placing this order? Is it gut based? Is it based on newspaper? Is it based on advisor? So can you quickly tag in the order path, right? So what we can then do is we can give you a PNL of all your tags, right? Tell you which,
that's a great idea. That's a great idea.
Right? As in your gut worked, or your friend worked, or your advisor worked.
I think these little things differentiate you massively from everybody else who offers sort of similar services.
No, and the thing is, the idea is willingness to say no to business, right? As in, like, just like saying that, you as my customer is more important than the revenue you generate. Just being able to say that keeps us very different to, I think.
Tell me, you have seen growth in multiple dimensions, right? The volume itself has grown exponentially. The number of products you have on offer, and each one of them must be massively subscribed. As you said, Coin is the largest direct distributor. What is your time? Where does your time get expended in? Where do you focus your time? Has your engagement with the business changed in any qualitative way in the last 2-3 years, perhaps? And how?
I think one of the best things I did in this journey was to stay away from the tech team. I did that thing in 2015, because until 2015, 2016, I used to sit with the tech team and try to influence them. And one day, me and Kailash were having a discussion saying, and he was very brutally honest with me, saying, dude, you know what, we're gonna keep playing this ping pong game, so the product's not gonna go forward. So let's change. So I think that was like not interfering with tech team was probably the right thing for a business guy to do. I think today most of my time really goes in figuring out what's the next thing to do, and take inputs from customer. I still spend 1 or 2 hours every day answering people's queries on different forums. It's just it kind of gives you a pulse of what's happening in the market. And
I must tell you that the few messages that I've sent you, few emails, I have always received a response within 10 minutes. I find it amazing with the volume of mail that you have, you still find the time to respond to. In 10 minutes. So I appreciate that.
I mean, for me, if there's any email pending in my inbox, it's I find it tough to sleep. So.
I agree. So, as I said, in more ways than one, there is a similarity that I see. Anyway, 45 minutes and the gong has run. So, I want to ask you this one last question.
Okay.
Nitin Kamath, the person. Other than business, what are you? Tell us all the facets of Nitin Kamath other than the business phase that we've seen so far.
Yeah. No, I mean, I am a big.
What do you like to do? How do you cool off?
Yeah. No, I mean, I'm a big sports buff, so I've played different kind of sports through my life. I used to play a lot of basketball, and I love my swimming and cycling. So I've done a bunch of long rides. I love music, so I play a little bit of guitar. So my youngest, my son plays the drums, so we play together. So
what do you listen to mainly?
Everything. Everything from Kishore Kumar to Pink Floyd to my mom's a Carnatic musician, so to Carnatic music. So it's so everything. It doesn't really matter. But personally, I'm right now trying to pick up all the Western classical guitar over the last 1 year, and because all this time in the house, I need to do something which is a little different. My wife
after 6 p.m. every day also now going forward, right?
No, that's 6 p.m. is for the team.